Back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in Megan Brantley. She's a VP of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you. It's been a rough month for Amazon post-earnings. We're down about 11% so far in August, based on, a little bit lighter than expected guidance here. But what kind of data are you guys having out of Likefolio? Because, less than a month ago, the stock was hitting all-time highs and everything seemed to be going right. Is it still going right, and the stock's just kind of selling off because of maybe some scaredy pants out there?
I like that thesis, the scaredy pants thesis. We'll have to dive into that. But whenever we look at Amazon, we can really break this down into three categories, at least on the consumer front. We can look at retail through its Prime sales. We could look at now increasingly advertising, which we didn't used to talk about as much. And then we can also look at AWS, its cloud. And to kick off, we see continued dominance, especially on the AWS front. When we look at competitors like Google and like Microsoft, we see continued month-over-month growth whenever it comes to traffic on its AWS console platform. And so that looks nice. We still see Amazon as the market leader in cloud and also continuing to grow its presence in cloud, which I think is really important moving forward. And then if we shift to retail, I think that, as you mentioned, that was the area of weakness that we saw last quarter. And what's crazy to me is that we're talking about weakness when we talk about a newly invented, or not, I guess not so newly, but a Prime Day event now that generates more than $14 billion in sales. That is just insane. But I think that what is happening on the retail front is we do see signs of a stressed consumer. So we see a lot of consumers who are actually trading down into Amazon, which is good for Amazon long term. But what that's doing is that's impacting the average sale price also. That's bringing that down. And we're also seeing rising competitions from names like Temu that consumers previously didn't have. And so there is an interesting dynamic at play on the retail front with a bit of a more stressed consumer. And according to Amazon, a distracted consumer. I think its leadership noted that shoppers were distracted by the news and less likely to spend time shopping on its app. And so that's an interesting take. But looking ahead, we do see some potential catalysts. Amazon just announced a partnership with TikTok that will allow shoppers to buy things from Amazon without ever leaving the TikTok app. So this idea of social commerce, it just makes sense. You want to make things as easy. You want to make it as easy as possible for consumers to spend money. And so partnerships like this with TikTok and also like with Pinterest, I think are really essential moving forward as consumers, engage more and more with these social platforms. And then on the advertising front, I think advertising revenue was up 20% in the quarter, but that fell in just short of expectations. We see this as an area of continued improvement moving forward. We see Amazon taking a larger piece of the streaming advertising pie, and we also see advertising at large picking up in the back half of 2024. So we'd expect to see some improvements here. So across the board, I would say we're positive for Amazon, and we like it even more considering this dip versus where it was at all-time highs.
Yeah, Megan, 14% in the last month. This stock has gone down. And in my opinion, Megan, this is really two discussions, isn't it? Because advertising is getting better, and this company gets stronger. It's AWS. Their operating income goes from $4 billion a year ago to $9.3 billion. This fiscal year. So that's really good in terms of their strength. And then you have, AI and automation probably making retail even more efficient. However, all those good things being said, they are not immune from a weak consumer, and the stock's not immune from a global sell-off. So it's really, if the economy stays strong, Amazon will outperform. But if the economy falters, or if there's a global stock sell-off, Amazon will be right there with the rest of them.
Yeah, you're exactly right. And so whenever we look at this, long term, if you want to take a wider horizon, we do see Amazon with really improved happiness levels, and overall right in line with Costco, which I think is about the happiest consumer that you can find in our universe, at least in terms of retail. And so we do see Amazon has made significant improvements when it comes to delivery speed and just overall user experience and the ability to find high quality items at a perceived value. So I think that that's really important long term for Amazon growth and expansion in the retail environment. However, as you mentioned, there are signs that consumers are spending less. They're being more cautious with their purchases. And so this could be a near-term hurdle for Amazon, or just a near-term headwind that we'll certainly be watching into the holiday season, which Amazon is already gearing up for.
Yeah, and some of these conference calls, you see the CEOs or CFOs come out, and they're all talking about dent in consumer spending and expectations and guidance. And it's actually starting to creep into the services side. You've seen some pullbacks in the hotels, Airbnb, and some of these other ones, and the airlines have already been under pressure. But Megan, I wanted to focus on the consumer happiness comparison. How is Amazon close to Costco? Costco's the best in the world, and Amazon's right there as far as happiness goes.
I know that's for us probably the best vote of confidence long term for this company, because Amazon, I think about a year ago maybe we were talking, the company was struggling with delivery. It was having a hard time meeting those expectations, and it looks like it's made improvements in efficiency on its own logistics network, and that is actually showing in this consumer happiness score. So for us, consumer happiness tends to be the best long-term indicator of future sales and future stock performance. You could extrapolate there. And so this is a really nice sign for us that as we see pullbacks in consumer spending and also in Amazon stock, that we do think that as the economy improves and as consumers kind of gain any type of spending power back, that Amazon will be a large beneficiary there.
Real quick here, Megan, before we let you go, with this pullback that we've seen from that high of above $201 just about a month ago, would you guys be buyers, dip buyers in here on this name?
Yeah, we certainly are. We think that there are a lot of tailwinds at play, and we think that this weakness in retail long term will ultimately resolve, and Amazon will continue to be a major winner there.
All right, great stuff, great data as always, Megan. Appreciate it.